Hey, what's up, guys? This is Mike here with Ninja Signals Trading, and in today's episode, this is actually a very, very important topic here. So, I'm going to be talking about taking profits and managing trades. And when I mean trades, this carries over to investments, anything that you hold, any asset that you hold, right? Because the most common thing that I've been hearing lately, especially with everything flying, is this, right? Man, I wish I would have sold XYZ Dogecoin at 75 cents. I wish I would have sold GameStop at the top. Or you hear a lot of the opposite too. Man, I wish I didn't sell everything at XYZ price and held it. I wish I didn't sell my AMC at, $20 to $30 and held it because now, it just hit $70. So one of the most difficult things in investing is finding an asset that will fly, right? Finding an asset that will make you a lot of money. But I would argue that what's even harder than finding the right asset is learning how to secure profits and when to take profits and how much, right? Because the most common mistake that people make is you're either all in or all out, right? I'm going to buy everything at one price and I'm going to sell everything at one price, right? Something that they don't teach you in school, which they should, is how do you buy in increments and how do you sell in increments. The buying in increments is not as important as the selling in increments. So let me get this started. So this topic actually caught my attention. It's been catching my attention, but more so today than anything because we're just in the group here, just doing our thing. Bitcoin hasn't been doing anything as of late. Today is June 2nd, 2021. Bitcoin's in a symmetrical triangle, not doing anything. And I was posting these charts because I'll do a little AMC analysis for you guys a little bit later. Maybe I'll even do a Doge analysis for you guys too, because there's nice examples in here. So look at this, right? I posted, and this is an example of that TA hocus pocus working, right? So AMC was still at $59, and I gave some targets to the upside, which are hint take profit targets. So had some confluence, did a extension, and look at that. So I was like, all right, so are we going to hit the $70 mark or the $90 mark, right? So $70, $90, mind blown, because this is a crazy short squeeze, right? And I was like, it rejected really hard off of the 3.618 to the dollar pretty much. And then, I get this message, bought 65 shares, $5, sold it at 27, it's up like crazy. Did the math. I was like, hey, if you let 300 shares run, sold the rest, the difference between selling some at the $70 target, that's not even accounting for higher targets, from selling at the $27 target, if you just let 300 shares run, that's an extra 13 grand. And then, this is not to, pick on anybody, but I know a lot of us do this. And, Vaz was gracious to let us use his name in this. But, he had mentioned something about Doge to me before too. And we'll go over the Doge example too, right? So, and then what's funny is after this, I get another text from another friend that was like, man, I sold AMC at $20. I think it was like 10 shares. It would have been up an extra $800. And I've heard the AMC and the Doge story, so much lately. So this is why taking partial profits is so important, right? So let's do the examples here. So Vaz initially bought 665 shares. So let's do the math. So 665 times 5. So the shares were bought at 3 grand, right? So at 27, let's say, just ballparking, so you could have sold 100 and we'll just call it 120 shares, right? So there could theoretically be 545 shares riding right now, that's a risk-free trade because the initial capital was pulled out. Okay, so times current price 64, so it's 35 G's. I'm sorry, Boz, I don't don't look at these numbers, man. It'll just make you go insane. And then the same example, let's go over to Doge. Okay, so, and he gave me permission to share this. So he said he had 69,000 Doge that was bought at 45 cents. Entry was 4.5 cents. So this was actually a phenomenal trade, actually. Absolutely nothing wrong with this, but could have made a little bit more money. So let's say 69,000, so $69,000. So 0.045 times 69,000. Okay, so this cost $3,000. There's a pattern. There seems to be $3,000 trades here. Recognizing a pattern, sir. So that was bought for, just for simplicities, let's just call it $3,000, right? 3,100, $3,000, whatever. So it was sold at 0.45 times 69,000. 69,000 Dogecoin, great number, sir. So 31,000. So that's a 10x. That's not a bad number. Not a bad number at all. So the problem with this is, so the next part of the tax was entry 4.5 cents, exit 45 cents, re-entry was at 66 cents. So this is the thing, right? If you do not let a piece running, or if you don't know how to do re-entries, which is not going to be this topic, it will be a different video, you are susceptible to FOMOing when it's higher, right? Because here's what happens psychologically. If you get down here, right? If you buy Doge, or even down here, right, when it was fractions of a cent, if you buy Doge down here and Doge goes up here, you are an absolute genius, right? Or if you're not, you look like an absolute genius. So what ends up happening, you're like, oh, I'm on top of the world, this is great. And then it goes down, you're like, oh my God, I sold the top, that was absolutely phenomenal. And it continues up to 70, 75 cents. And this is where human emotion kicks in, because number one, there's the opportunity cost. You missed out on all this extra profit, right? These 70% gains. And number two, there's always that element of, man, I was right. I could have been, if this is even a right word, I could have been so much more right, right? So then you want to, the human emotion, you want to, what's the word? Not justify that, but reaffirm that, right? You want to reaffirm that by you were in the right asset. So this is why there's such a big human emotion for people to FOMO back in. And this happens with, Dogecoin, AMC, GameStop, Bitcoin. You get in at a really good price and then you get out. And, you're like, man, I would have been so right if I just held. And then you FOMO back in at a higher price. So this gentleman's re-entry, he texted me, was at 66 cents for a much larger than the $3,000 buy. So needless to say, that's a little bit underwater. Still above the initial $3,000 buying capital, which is, perfectly fine. But in this episode, I will teach you not necessarily exactly where to take a profits, but how to set a plan to take profits, right? And the concept of taking profits, because this shouldn't be an all or nothing game, right? It depends. I'm going to eat my words here. So if you guys have seen my latest video nugget on our Ninja Signals Trading Instagram page, I talked about defining what type of a trader you are, right? If your plan was to just 10x your investment with Doge, and that was it, end of story, you're done with the asset, phenomenal. That was your plan, stick to it, and do not FOMO back in when it's higher, right? But if your plan was not to just 10x, get 100% in, 100% out, this is where I'm going to talk about taking profits, right? So again, this this is talking about making a plan. If your idea is just to, you have a certain target that you want to hit and you're 100% good, no other emotions, no FOMO, you're done with the trade, the trade can go up, Dogecoin could go to $100 and you will not feel bad because that's your plan. Phenomenal, right? That's perfect. If your plan is to hold an asset like Bitcoin for 10 years and you don't need to take profits for 10 years, phenomenal, right? But for most people, we're in it for the short term to intermediate term gains. So here's a few pointers that I will give you, right? So number one pointer is, do not make it about 100% all in or all out. This is the number one mistake people make, and you have so much stress and anxiety deciding where to sell because it's all in or all out, right? If you do not sell anything and the price goes up and comes back down, you just missed out, you made no profit, maybe you'll lose money. That's not good. If you sell too early and you're completely out, and then you missed another 300%, 500% gains, now you're going to be feeling that FOMO and like, oh shoot, why the heck did I sell, right? So you'll hear these stories over and over again. Man, I sold too early, or man, I sold too late. And the worst thing that can happen to you is you buy an asset, you're massive profits, and it comes back on you and you lose your money. The second worst thing is selling too early, way too early, and you made a little bit of profit, but you could have made a lot of profit, right? You got the timing of the entry right, but you did not time the exit right. And the third thing I would say is, if you're going to re-enter or enter in general, you don't necessarily need to create one set price, right? If you were re-entering Doge right here, when it pulled back, you could have got in right here, right here, right here, right here, 4 buy orders, and you're good, right? So you don't, and then even if it was on the way back up and you can, you think it's going to be a lot more, you can do it in partials, right? The 66 cents mark, you can buy some right here, okay? And then you can wait for a pullback, buy some right here, okay? You can wait for a further pullback, buy some right here, right here. I mean, you would still be in a loss, but this is a lot less of a loss. Your average price might be right here. A lot less of a loss than if your average price was all the way up here, right? So the number one takeaway is, stop thinking about in 100%. So there is absolutely no need to say I'm all in or all out, right? Let me give you guys an example. So I'm not going to sit here and tell you exactly how much profits to take at certain prices, but the two things you need to identify. And the nice thing about this too is you can set limit sell orders even on Robinhood, even on these beginner investing platforms. So what that does is, let's say you're on vacation for a week and you set a limit sell order for 70 cents. Okay. And then you go on vacation and price hits there and you didn't get to manually sell it, and you still hit your take profit. All right, actually cover that in a little bit too. So I'm kind of hopping around because this is a surface level touch on a pretty wide topic here. So the two things that you need to develop and determine when you enter an asset. So I always like to say, do not enter in a trade or an investment if you don't have a plan, right? If you don't know where your entry and where your exits are, why are you in the trade? Just like with life, right? If you're failing to plan, you're planning to fail. If you have an entry and you're just kind of YOLOing it, some people, it turns out great, but other people, there's always some type of FOMO or could have or comes back on them, right? So the three ingredients rather, right, is the price targets, where you want to take profits, and how much, right? What percentages. So instead of thinking in 100 percentages, start thinking in increments, right? Maybe you divide it into fours, 25%. You have take profit levels, and you take 25% at each take profit level. Maybe you have 10%, spread it out, right? So you have more running. Maybe, and these are different types of strategies. Maybe you take when the price goes up X amount, you take a little bit of profit. When it doubles, you take out your initial investment, let the rest run, and start taking partial profits on those, right? You have a free trade. So there's multiple ways to do it, or you just take increments. So you decide. Not all the take profits have to be decided now, but you have to at least decide a couple of take profit points. So maybe let's say you take profit in 10% increments, right? You have 10 take profit points. You decide the first 4 or 5 right now. The third ingredient is you need to figure out where your invalidation is, where your stop loss is. So where are you wrong, right? If you have a trade come back on you, you absolutely need a stop loss, because if you do not determine that ahead of time, you're going to be sitting underwater, stressed out on your trade forever. Um, and then at some point, it's either going to go to zero, or you lose a massive majority of your investment, or the actually another worse scenario comes back to your entry and you're like, oh my god, okay, fine, it's going to go up, and then it plummets again, right? So you need to know your invalidation, and then in a later date, I'll talk about re-entry, but that would be a two B, right? You need to know where your take profits are, and if you want to get complex with it, you could figure out your re-entries where you're going to compound. So, but I won't talk about that right now, because this is just on a beginner's level. So let's say you buy Dogecoin at 6 cents, right? Okay. Or what was it? 4.5 cents. Oh, this is not a bad entry. Close enough. So you need to figure out where your invalidation is. So, and I'll just give you an example. If you don't understand these concepts, that's perfectly okay. I'll go over stop losses and all that in future episodes. This is just to get the concept of partial profit taking out here. Okay. So you do not need to copy this, but this is just an example of the concept. So let's say you figure out that, hey, you know what? This was the last low. If Dogecoin comes below this low, that's my stop loss. It's a 33% stop, 50% stop loss. It hurts, but you know what? At least I'm out. I don't lose 100%, right? In case this is a massive pump and up. So, okay, perfect. You have your entry and your stop loss. Where are your take profit targets, right? So the nice thing about Dogecoin is when it went up, you didn't have to think about it too much. It just went parabolic. Pretty much you blinked and price was right here. So 12 cents, okay? So let's say if you have $69,000, okay, and you see Doge do this, maybe you take 10%. So let's do the math here. So, 6,900. So 0.12 times, okay, $820. So you still have 90%. That's not groundbreaking money, but you secured your profit. And now what people do is now they can move this stop loss. So you made some money. You can move this stop loss to entry or right above entry. So no matter what, you made $800. And if the trade comes back, the rest of your 90% is break even. So you have no risk. So we call this a risk-free trade, right? Obviously, Dogecoin went to the moon, but what if it didn't? And you came back on you and you lost your money, right? So in this case, you invested $3,000. Okay, you made $800. That's a pretty decent ROI for maybe a couple of months here. Okay, and then now you have a risk-free trade. You have zero risk on the remaining of your capital. This is what I call sleeping easy, right? If you've ever bought an asset or an investment or entered a trade and you can't sleep, it's because you don't have your stop loss set and you don't have your take profit one when it's in profits, right? So I'm very quick to take profit one. So great. So now you have taken your profit one, you go to sleep, you wake up, and you're like, what the heck, right? The next rejection here. So he said he sold at, what was it, 44 cents? Phenomenal. Okay, he caught the top right here, actually. So he claims that he doesn't know TA, but maybe he's lying. He caught the top. So let's see if you caught the top. Okay, so that's, let's say he's like, okay, so it just went to the moon. Maybe I want to take 20%. Okay, so that's 13.8 at 44 cents. Okay, plus 800. Okay, now you made $6,800 in profit, and you still have 70% of your trade, and you cut the top right here, right? You know, if the trade comes back, you already have more than your initial capital. You know, you could have saw it come down, take 20% right here, and you still have more. You know, you still have your original $3,000 investment secured. So now this becomes okay. So yes, there was 30 grand in profit on the table. So you could have taken more. You could have taken half of that remaining. You know, you could have taken more, but in this example, let's say 20% was taken, right? So right here, what you can do is you can actually trail your stop to right here. So move your stop loss up. So then at least you still have all of this profit from your entry if it comes back on you. Or you can just leave it at break even because you already made $6,800. We'll round up and say 7 grand. You just made 7 grand on your $3,000 investment, and you still have the rest running, right? So you still have 70% of your investment running. So let's say even if it comes down here, it's at 26 cents. Okay, you still have 12 grand sitting in the pot. So that's a very good position to be in because even if it gets stopped out, you still have, you know, all the way at entry, you still probably have 2 grand of that. If it gets stopped out right here, you probably still have like 8 grand more, right? Aside from your 7 grand profit. So now you have, you know, 20 grand, right? 7 grand taken, a little under 13 grand still remaining, even when you're down here, right? This is a phenomenal re-entry point, but we'll talk about why. I mean, it was close to your take profit 1 too. But so when you have take profit 2, you have 70% of your trade left. So now it goes up again, right? When it comes up here and this comes down, so what I would do is you can always ask me for take profit targets. Okay, so look at that. So the 2.618, this was a major take profit target. So let's say you do 30% right here. Okay, so times 0.684. It's $14,000. You have your 7,000. Okay, so that's $21,000. Okay, you probably would have taken a little bit more. Probably would have taken half off the table right here. But this is just partial profit taking examples, right? So you know, you come back down here. This was it missed the 3 extension, but I'll show you why. So I posted this chart in the group. The hard thing about Doge is, let's see here. There's a Bitcoin pair too. It double topped on the 2 expansion on the BTC pair. So this was actually a very technical rejection here. So, but just on the trading the USD pair is a little bit harder, because it's influenced by Bitcoin movements, right? If Bitcoin goes to 200 grand, this will probably triple too, just, you know, because Bitcoin's dragging it up. But okay, so with that being said, you know, you still have 40% of your trade right here. In this scenario, when you still have 40% of your trade, so let's say at 66 cents, so okay, you still have 18 grand in the trade. So if you still have $18,000 in the trade in Dogecoin running, I would wager to say that your odds of FOMOing are a lot less, right? Because you still have something in the trade. So this is where the psychology kicks in. You're like, look, I've locked in my profits. This is a free trade. If Dogecoin comes back down to 0, I get stopped out at entry. Great, I made a ton of money. If Dogecoin goes to $1 to $2, phenomenal. Let's go to the moon, man. I still have 40% of my trade. Let's go to the moon, baby. So you being right on getting this entry on a coin and the coin going to the moon, you're still right. And psychologically, you're a lot less likely to be like, man, I want to get back into the status of being right and rebuy in at a bad price, right? So if that makes sense. So this is one profit taking strategy, and then this is a free nugget right here. So we missed the 3. So I think if you front run the 3.618 at 89 cents, the 4 is a big target for take profit. Okay. And $1.10. So if you looked at my psychological video, this one, if you take profit here, this one's probably less relevant. Or you can just try to skip this one and go to 97 cents. Right, just go here. So if you watch my psychological video, there's so many people waiting to sell Doge at exactly $1, just like there's so many people waiting to sell Bitcoin at exactly $1. What's going to happen is it's probably going to come either to this level or this level, right? Come right before and just miss it. So all the people that were looking to sell $1 is going to, be like, oh man, I missed it. Is it doing one of these, right? And you start selling back down here. That's what the market makers do to you. Or what's going to happen is there's going to be so much selling at short interest at $1, and they're going to short squeeze this to the moon and wreck all the shorters, and all the people, same psychology, right? Same psychology. All the people that sold Doge at exactly $1, now when it goes to like $1.20, they'll be like, oh, F, I did the same thing, right? I'm going to buy back at like $1.30, right? Or whatever that ends up being. Does that make sense? So market makers do that for you. So this is your free Doge analysis. Let me just finish up Doge real quick and go to AMC. So here's the thing about Doge. It gets listed on Bitcoin Pro tomorrow. These coins, just like if you look at Cardano, are notorious for pumping and dumping. So pump before the listing, dump right after the listing. And I showed this to my group right here. Let's see, where's Cardano? 88. That was not it. Okay, so this was the Cardano listing, right? Pump, 60% before, and then immediate dump. So just pump it up. I mean, of course, anything's possible, but so you have the factor of that. So I think there's a pump coming, but also the fact that now you can trade. So you can trade Doge on bybit now, and you can short it with leverage. That's part of why Cardano got wrecked so hard, because I know for a fact that a lot of big accounts were shorting it on leverage. Because you can only, on Coinbase, I haven't used Coinbase, I believe you can only buy it on 1x leverage. But on bybit, you can 100x short. So with the same dollar, you can have 100 times the short position. So there's that. Otherwise, I believe we're sitting on, or we got supported. It's not a mystery that this was a support level right here. We're right around the point of control. This is another support level right here, but the next real support level is in this little order block cluster right here, so around 12-13 cents. So something to note for Dogecoin. Targets to the upside, I would say 89 cents is the big one, 97 cents is the big one, and if it does one of these and consolidates, then $1.10 is a big one. If it squeezes right past, then I don't have enough extensions on here. So that's Dogecoin for you. Let's go over to AMC. Okay. Oh, is AMC going to hit the $90? So check this out. I was like, is AMC gonna hit? So it was right here and just squeezed really hard. I was like, is AMC gonna hit $70, right? Bam, hit it like 30 minutes later. and I was consolidating for that. I swear, if this hits $90 while I'm recording, I'll go nuts. So it's actually okay. So oscillators are I don't really use these indicators much, but looks like oscillators are resetting rapidly, so we could see another push here. Let's get it. Let's get it. So here's a freebie for you, right? Like I said in the group, 2 big take profit targets, $90 and $70. I mean 72. We're rounding, right? $72, $90. Okay. If it goes past 90, well, let's see here. Do I even have a 5.618? Does that even work? $109. So I don't know about that, man. But hey, with these short squeezes, anything is possible. But same thing with AMC, right? So there's the opportunity cost, and with AMC, same thing. With these memes or these squeezes, same thing. So there was a lot of buying around the $5 mark. So look, you don't have to do all or nothing, right? I don't think I have to beat a dead horse, but you can make a plan. I won't go as in depth with the Doge example, but if you bought down here, which, you know, hindsight's always 2020. I think it was coming down for that gap fill. I don't do stocks a lot more, but actually, I wonder if it was point of control down there. So check out this consolidation range. Nope, not even close. This range. Literally all the volume is down here. That's insane. That is absolutely insane. But okay, so I mean, if you bought down here, there wasn't a whole lot of technical levels, but phenomenal buy, absolutely phenomenal buy right here. So here's my thing, right? At $5, when this starts squeezing up to $10, that would be a natural take profit target. So you can do one of two things, because this squeezed up to 10 pretty quick here within a couple of days after it took off. You could either take half out, you have your original investment, let the rest ride, or take 10%, 25%, 30%, whatever it might be, and set your stop loss to entry, right? So that way you have a risk-free trade, and you have, you still have some money left on the table. So let's say 665 times or divided by 10, so 66.5 times 10, okay? So $665, you could have been 60, so this example, Vaz, could have been $665 in profit, okay? And if it comes back, made $665, pretty good ROI, whatever, right? I would not say this is another take profit target right here, but this one right here would have been, when this got rejected, this was a big take profit target. We'll call that $19. So 66.5 times 19. Okay. So plus, what was it? Okay. So if you took another 10% off, you're almost $2,000. So you almost recouped your initial, or you almost doubled your initial investment in taking profits, right? So I actually did not mention this, but paper profits are not real profits. Profits are not profits until they're realized. So until you sell and you realize a profit, it is not a real profit, because it can come back on you, right? So you take another 10% right here, and this would have been the 1.618. This would have been a huge take profit, and this is your previous high right here, right? So this probably would have been a 20%er. Okay, so 35 times, so 665 times 0.2, okay, times 35.2, plus your 2 grand. Okay, so you would have been, call it $6,500 in profit, and so 10, 10, 20, so you still have 60% of your trade running, right? This was a crazy squeeze. $50 would have been a take profit as well. So you take another 20%. So 53 plus 6681. Okay, so now you have 13 grand. This was another huge take profit, and so is this, right? Okay, so what is this? So 10. So this is 20, 40, 60. Could take another 20% right here. What is it? 72. Okay, that's plus 13,730. Okay. So you could have, you could have closed the trade right there. So, or yeah, you could have closed it, or you still have 20% running. That's where if you start having pieces, now you take 10% there. And you still have, so that would have been 30 grand, and you still have, what is it, 65 and a half shares running. That can go to the moon, that can go to zero. At that point, when you made that much profit on your shares, let 65 shares run, right? So so at this point, if price comes up here, you're at, you still have 65 shares and you're $29,000 in realized profit. So 65, if it came back down to current prices, so you would have been, what is that, 33 grand total, right? So if they were sold at all at $27, 17 grand. So that was not a bad sell, but could have had a lot more, right? Could have had a lot more, but this is not to make anybody feel bad. Do not FOMO in at these prices, at this posturing right here. Man, someone market buy this and just pump it to $90 so it can happen on video. Hope that makes sense. I'll do one more. The example is over by now, but I'll just do one more example with Bitcoin. Where did so we can do this. Oh, this GameStop. Okay. So with Bitcoin, same thing. I'll give you an example, right? If people bought down here, I was telling everybody buy around 8K, but I don't think a lot of people did. But let's say if you bought around 20K, right? Say if you have your 20K, once you get to 40K, because we know in these parabolic cycles, Bitcoin goes crazy. Once you get to 40K, this is where you can take 10%, 20%. You can take half off. You can take, half will give you your original investment, let the rest run. So you wouldn't be worrying about it. So hit the 40K. Oh, this is one thing that I do want to mention that I forgot, right? So all those targets at AMC, look, the analysis of this and these targets is another story, but some of these take profit targets are pretty easy, right? If you get in at $10, if you get in at $5, $10 is a natural take profit target. This high right here, under $20, is a natural take profit target. Then you can determine the rest, right? So what you can do is on Robinhood or anything, you can set limit orders. So once you buy this, you can already set your stop loss and you can already have your sell order, right? Because what happened here, it hit $10 It went a little above, but then it went back down to $7 for quite a while here. For a week or whatever that ends up being, right? But if you had your limit order, you did not have to be in front of your computer or phone. It would have just hit your sell order, came back down. Same thing with this one, right? At $35, this would have been hard to catch, right? Once it happened, because this could have very well just did one of these and came back down, right? So you set your limit order, hits the limit order, comes back down. Doesn't matter. The price could have plummeted all the way back down to your entry, but you've hit the take profit. Same with this, right? This would have been hard to catch, but if you already knew this level, set your limit order. If you're still in AMC, set your limit order up here. So that way, the nice thing about this is once you've set your take profits and your stop losses, you're literally stress-free, especially after you hit that first stop loss. You're 100% stress-free. There's no risk to the trade. The rest of your trade is running. You have your stop losses, and you don't even have to look at it. You're automatically going to take profits. That is the best feeling in the world. And you just wake up, maybe AMC hit your target, already pulled back. Maybe you're sleeping right now. It hit your target right now. It pulled back $10 from that $72 target. You already took your profits because of your limit sell order. You're good to go, right? If you don't set those limit sell orders, you're going to be like, oh man, I could have sold. Do I sell now? Do I sell now? Do I sell now? Maybe you would have sold down here, right? Maybe it comes back. You're like, do I sell now? I don't know. Maybe I'll wait for it to go up back to 72. Maybe it won't. And then you're like, do I sell right here if it comes right here? Do I sell right here if it comes right here? Like, I don't know, man. It's hard after it gets that initial rejection. So you could literally, so here's the nice thing about having a plan, right? You could literally plan out your trade and just have the system do the rest for you. You're done. Walk away. You're golden. Watch your money go, let a piece run, let at least 5 to 10% run, right? So in this example, you have 20% left. Only take 10 or 15% at $90. Just let the rest run. You never know what happens. It can go back down to $5, or it can go to, I don't know, can squeeze to well over $100. Who knows? But let a piece run, right? Same with Bitcoin, right? You set a limit order right here. There wasn't much time to sell. It comes back down. And then this is where you do your fibs for all-time high price discovery. All-time highs are always a little bit difficult. Sorry, this right here. All-time highs are always a little bit difficult because it's in price discovery. Okay, so $40,000, good sell target. Then when you come back up, low. Okay, $57,000. That's your two. Okay, good sell target. 66. That was a good sell target too, but we front run it, of course, and then we plummeted back down. But look. If you've taken profits, if your entry was all the way down at 18K, or if you got in right here and you took some profits right here, you're golden, right? So especially if you got in around 20K, which at the time, I remember when we hit, we broke 20K, and Bitcoin seemed like such a bad buy at the time because we're like, oh my God, it's so high. It was just 8 grand a couple of months ago. It was 4 grand less than a year ago. So it seemed like such a nice buy. Doesn't seem so bad now. But if you bought down here and you took, say, 10%, 20%, so you took 30% profits, you're not sweating because you took some profits. Even though the rest of your 70% is suffering, you're not sweating. If you took 50% right here and took a little bit more right here, you already got your original investment out. You're good to go. Now, so here's the nice thing too. If you took profits, you were looking to reaccumulate right here. Hint, hint. You're looking to reaccumulate right here, right? But if you bought like right here, you're almost underwater. If you bought right here and you take no profits, it's come all the way back down. It's in danger of coming all the way back down to your entry, right? So you're sweating right now. So this is why taking profits is so important. If you've taken, 20 to 50, 60%, and it's coming back down here, you're like, phenomenal, right? Up here, you're like, man, come back down to my entry. Down here, you're like, yes, when everybody else is, sweating. So this is the power of taking partial profits. Super, super useful tool in any asset that you buy. This is the same way that we enter day trades, by the way. We always have an entry, a stop loss, and we always have take profit targets, and you move your stop loss to entry. Or you can move it up, right? You can, what's called trail your stop loss. That's a whole nother topic. But I'll give you guys a little nugget. So, where was it? That's a rough range to accumulate. Rough range to accumulate. Rough range to accumulate. And rough range to accumulate if we get down there. So that's your freebie right there if you want to set your limit buy orders. Hint, hint. So I mean, we could just blast off to the moon, but if we don't, there you have it. All right, guys, so that concludes today's episode of Ninja Signals Trading Education. If you guys want more in-depth stuff and more information and want more questions answered and join the group, ninjasignals.trade, where we get all these answers. We have daily trades called out, literally spoon feed you guys with daily setups that have about an 80% hit rate. And yeah, we crush it in the charts. Oh, and shout out to Vaz for letting me use his example. If you guys want to check him out, Cobex CG, they're up in Sacramento area. If you guys need any remodeling work done, check out their beautiful website. Cobex CG, use him. That was my little shameless plug for him graciously letting me use his example. And again, it wasn't to make anybody feel bad about missing out. This is a great learning opportunity, because I'm willing to bet if you invest and you have friends that invest, I'm willing to wager at least one other person that either took profits too early. I mean, not profits too early, completely exited the trade too early, or did not take any profits and the trade came back. So this will be a public video because it's such an important topic. So feel free to share this with your friends, and I hope you guys enjoy. Until the next one.